Hey, welcome to Mortgage Minute for Tuesday, January 18th. This is the first Mortgage Minute we've done this year. And, well, getting off to a bang here with Jim Flaherty, Ottawa, making huge announcements yesterday about the changes to the mortgage rules. Today, Mark Carney's making no changes to the mortgage interest rate. So headlines are all talking about the new mortgage rules. Here they are. Real quick snapshot. Number one, they're going to change amortization periods from 35 years down to 30. Number two, they're going to say the maximum amount Canadians can borrow to refinance their home will go from 90% down to 85%, and the government will no longer insure HELOCs, home equity lines of credit. Now, what does this mean to you as a homeowner, a purchaser, or a real estate investor? First and foremost, in the big picture, these are very, very small changes. Number one, amortization periods. The difference between, on a $300,000 mortgage, the difference between 35-year amortization and a 30-year amortization is roughly about $100 a month. Yes, that's going to make it more expensive, but my goodness, you know what, if $100 a month is going to make the difference between you getting the mortgage or not getting the mortgage, maybe you shouldn't have qualified in the first place. And that's what the Bank of Canada, or that's what the Ottawa is going after. They're going after the fringe players here. They're saying those who really couldn't afford it in the first place shouldn't, so they're trying to strategically, almost surgically go after that market. The second thing, Canadians refinancing their homes. I'm going to lump these together. They're not insuring HELOCs, which means home equity lines of credit, and they're not allowing you to borrow up beyond 85% of your home in a refinance. You can still put 5% down to buy a home, but you can't refinance your home up to 90% anymore. They've scaled that back to 85%. Here's what they're doing. They're saying don't use your home as an ATM machine. They're worried about the government insuring mortgages that are allowing Canadians to go out there and buy cars, boats, TVs, and things like that. So bottom line is Jim Flaherty is trying to go after the fringe of people who are accessing too much equity in their home. He wants to make sure that Canadians are saving up more money in their homes, and he also wants to encourage you to have that, force that savings by lowering the amortization. What does this all mean to you? If you're a real estate investor, guess what? They already hit you last year when they came out and said you can't put more than, they took away the high ratio option for real estate investors last year. So these rules really don't impact the real estate investor, because these rules only impact CMHC insured mortgages. If you're buying a conventional mortgage like you will be as a real estate investor, it has zero impact. And bottom line is he's given Mark Carney some breathing room, and we saw that today. Mark Carney didn't have to use interest rates to cool down the market. Jim Flaherty did it with Ottawa's rule changes. That meant that Carney could go into today's rate announcement, make no change in interest rates, so the prime did not go up. But watch for it. Write this down. March 1st is the date you want to mark in your calendar. March 1st is the next rate announcement by the Bank of Canada, and two things are going to happen. All these rules take effect in March. Interest rates will probably go up in March. Take the combination of a rising rates and impending rule changes and look for February to be busier than usual in terms of the real estate market. So again, if you're looking to go out there and act and purchase something, you might want to do it sooner rather than later, because the closer we get to March 1st, there's going to be a little bit of, I don't want to say panic, but there's going to be a heightened activity in the market, which is going to drive prices up. And that is the unintended consequence from yesterday's actions by the federal government. That's the Mortgage Minute for Tuesday, January 18th. And you can always go to my website for more information or send us an email at peterkinch.com.